Hello and welcome to the Weekend Investing Daily Byte. Today is 17th of April, a action-packed day in the markets today. Infosys leading the markets down after its result post-market closure on Thursday. Friday was a holiday here. ADR on the US markets tanked about 11% in those 2 days, and we also opened similarly about 11 to 12% down on the Infosys stock, and that created the mood for a negative sentiment. HDFC Bank also came out with results this weekend. As per every result, a sort of an Excel style 20% growth in profits. Markets probably were expecting a bit more. So HDFC Bank also, coming off a bit, but the results are pretty good there actually. So if we look at the Nifty got dented because of these two large names going off. L&T and some other stocks also were down, but after a run up of almost 9 sessions, a swing back or a corrective mode was very essential. That has happened today. Now the key will be whether this sustains on the lower side or not. The candle that we see on the chart looks like a bearish engulfing candle. It has engulfed 2 days of previous 2 days of data here. So from that perspective, it does look meaningful in terms of, it could be a tipping point again, just like we had here. And several times in the past, we've had these rallies and then they just fizzle out. So far, my personal bias is towards long, but it does look like that uh, this trend line that we had here, Nifty quickly went and retested that trend line. I should have drawn it in that chart, but this trend line that we had here has been retested today, and Nifty has bounced back from there. So it may so happen that in another 1 or 2 sessions we may restart our upward journey, but today's low will be important. If this low starts to get broken on the downside, then this rally may be over. So this is sort of the setup that I have in my mind, although we are not using this setup for any of our products or strategies because they are on autopilot mode. But this is more for discussion and for people to set up their trades if they are into discretionary trading. So as I said, Nifty heat map extremely polarized today. Uh, IT stocks, Infosys down 9.5%, recovered actually a couple of percent. TCS also recovered a couple of percent, still down. Wipro down. Tech Mahindra was down 7%, now at close down 5.2%. So some recovery in IT. HDFC Twins also down 1.5%, no recovery there. Uh, L&T down 2%, NTPC also down 2%. But where were the gains? The gains were in State Bank of India and all other public sector banks. So that PSU banking was really doing well. Energy stocks, Coal India, Reliance, Power Grid, these all stocks were doing all right. FMCG was doing very well today. Nestle was up 4%, ITC made a new high at 1%, up, Britannia up, levers up. So that was a very good sector where the longs were getting formed. So very polarized session. I sense that because it was so biased down towards IT and private banking, that the Nifty had to be balanced out by these stocks going up, and this happens whenever you will see that some large heavyweight gets skewed, you will see counterweights doing very well on that day. Now, whether it is LIC doing that or the entire collective effort of the market, I don't know. But yes, I mean, on terms of LIC, market continues to get closer to its all-time high, and LIC continues to get closer to its all-time lows. That is not a good sign, actually. Sectors, you can see here very clearly, most sectors did not do anything, but IT sector was down 4.7%, largely on the back of Infosys and TCS. and Tech Mahindra. And PSU banks, you can see it was a plus 3.1%. So PSU banks coming out with the blazing guns today at plus 3.1%. For the week now, one 5 sessions, PSU banks are up almost 6%, 5.6%, and IT is down 7% for the week. And for the month also, PSU banks, real estate, private banks, Bank Nifty, Pharma have been the top gainers of the last month. IT remains the only sector that has been bleeding over the past 1 month. Rest, every sector has pulled back and in some format, some form of green now. So that's that for the sectors. So far for this financial year, everything is in green except IT stocks. Mid cap stocks did quite well. It did clip the lower end of the previous session, but a very fine recovery and actually closed much higher than the previous session. So very good price action here. No problem at all on the mid cap front. Small caps also closing higher than the previous session. Uh, no problem here as well. So the deep correction that and Nifty has had after run up, these sub segments have not had that, and are looking quite all right uh, with respect to Nifty. Bank Nifty, it did dip till about half of where we were in the previous session, but quickly recovered. Net closed higher than previous session. Of course, opening was much higher, but I think in terms of closing, we've done well. Beating all these resistances and in closing here in the green. Bank Nifty is just barely 5% now from an all-time high, looking quite good actually, where it has come back and sort of retested this zone of support and gone back up today. Infosys is the stock in question. So prior to today's session, Infosys since April, if you notice here, this from the bottom of COVID at around adjusted level of 500 rupees, Infosys had gone up from 500 to almost 2000. So COVID rally was 4x for Infosys, going from near 500 to near 2000. I mean, 4x in less than about 20 months was the record here. Now, if and whenever you will get such rallies in any stock, any index, any large cap, any small cap, one can expect some vicious give back also, and that is what is happening after the initial dip here in April. This was after the April results. There was a massive dip uh, in on after the December results. Sorry, this was the massive dip last year on April results, and since last year April, Infosys has been range bound in this region of nearly 1375 to 1650, and this results, it has again broken this channel, just like it was sort of hobbing around here for the last 1 year here. Then it broke down and it created a channel here, and then it broke down again today. But today's candle is still not so bad, I would say. It's almost like a pattern where the momentarily this bottom was made and it was never revisited during the day. So if Infosys continues to hold in near about this and gradually, fills up this gap, maybe all the worst is over from that perspective. But if Infosys, again breaks down the low of the day, I think today's low is very important on the Infosys chart from a chart perspective. Then the floodgates for gradual lower levels is open. Although we will discuss more about this in other charts also. So the topic of discussion today remains whether Infosys is in trouble or not. So now this channel is about 250 points of channel, and once the channel breaks down, it's sort of a flag also. You can expect that another 250 points will go off. So maybe 1100, 1150 is somewhere where a move is justified. We were near, I think, 1200 in this chart, below 1200 also today. So we very much went near the target of this channel breakdown. And in the next few days, it will be clear whether we are quickly trying to claw back this drop and enter into this channel again, or are we going to create another jiggly pattern here and go flat. I don't think we will go down dramatically, because Infosys is one stock which is very very widely held. People have immense confidence on it, and unless downgrades of sub 1000 are coming on, I don't think people will really quickly sell off their stock. So people are averaging, people are buying. People love this stock, and we will see why. So today I had tweeted some charts on Infosys, and Mr. Ashu Dubey had very kindly tweeted this drawdown chart. Saved me some time to do this again. So I'm using his chart that he put up. And these are the major falls of Infosys in the last 20 odd years, 23 years actually. So we had a 85% fall after the dot com bust. It's looking small because this is a logarithmic chart, but 85% fall happened after 2000. 57% fall happened after the 2008 GFC crisis. 40% fall happened in 2011 to 2013 period. Then after 2017, we had a fall of about 33%. Then a fall of 39% at COVID. And again now a fall of nearly 39% at this point of time. So what we can see, last four falls have been very near where we are, but the two falls in earlier in 2001 and 2008 were very dramatic in terms of 57 and 84%. So my current sense, and this is just speculation, is that the current fall is more like the last three or four falls, because we have not yet gone into that kind of a global scenario which 2000 was for IT stocks, or 2008 was for the entire market. So until that happens, we would be better off to presume that this is more cyclical, business cycle in nature, kind of a fall that we have seen several times in the past. Of course, it has taken time each time, maybe a year and a half, 2 years, 3 years, for it to fully recover from here. So don't expect that it will take a U-turn and go to an all-time high anytime soon, because the forecast for the next quarter is like 1% or 2% revenue growth. So it is going to take time. That is my guess. And the best thing that could happen is that it starts to create a sideways channel and do some consolidation sort of a move on the side. Having said that, on a if we see the IT index itself, the CNX Nifty IT Index, it has taken a fantastic support at where it was. The major support was there, and has bounced off from here today. So this was the gap down today, and it has taken the support here. The line could have been slightly more straighter, but it has taken the support here. So now this bottom of this or the support line will be very important actually from a Nifty IT perspective. If this starts to get broken down, then all hell will get loose actually. Then we are looking for to go back to pre-COVID levels. I mean, Infosys right now is at about 50% higher than pre-COVID levels. Of course, the earnings has also gone up to some certain extent, but then future earnings are kind of in a doldrum right now. So yeah, in that sense, from a valuation perspective, for those of you who watch Infosys on a valuation has come down. Maybe it has come down to almost historic levels, but it is not cheap as such from that perspective. One very interesting chart divergence that I saw. This is Nasdaq versus CNX IT Index in dollar terms. So both are in dollar terms, very comparable. Uh, so what you can see is that from the last 6-7 years, the trajectory of both CNX IT in dollar terms and Nasdaq was very very similar. going up in 2016, 17, coming down in 18, then going up in 19, 20 till COVID, then COVID fall, and then the recovery from COVID, and then the fall from COVID. But what has happened in the last, uh, I would say, couple of months is that there is a divergence there. CNX IT index continues to fall and it is very near its bottom, whereas Nasdaq has recovered quite well and it's near its top since the last 6 or 8 months. So it's like a very uncharacteristic divergence that has happened in CNX IT dollar chart versus the Nasdaq chart. So whether this now Nasdaq will follow CNX IT down and we are going much lower, is one case, or we have seen the worst of CNX IT and we will now recover and catch up with Nasdaq. These are the two cases that are likely to play out, because in the longer term they do play their moves hand in hand, and this has been a very uncharacteristic divergence, so to say. So if I sort of sum it up, we are not really looking at a blanket buy or sell call here, because see, one thing you need to be very clear, and don't even ask anybody whether I should buy something or not, because every strategy will have a very different entry and exit point. uh, you could be a medium term player, you could be a long term player, you could be a deep value player, you could be a momentum player. So every person's investing style could be different. So you need to see what is fitting your model of investment rather than asking somebody whether I should buy or sell. Because even if somebody tells you buy Infosys, will you be able to sell when he sells, or whenever there is a sell call in general? Don't get confused like that. So from that perspective, I will not give you a buy or sell here. Of course, we don't have any of these top IT names in our momentum portfolios, because they had lost momentum long time back. So until they come back into momentum, we will not even look at them or touch them. I think KPIT Tech is one stock that was there in our portfolios, which is still there, and Persistent was one which has fallen out in from most of the portfolios. So, nevertheless, TCS, ITC, Infosys, and Tech Mahindra were there earlier, but I think they are not there in any strategy now. So this part is something that is a bit disturbing to me as of now, but we should watch this and see how this divergence plays out. If CNX IT, this chart that I'm showing you, if it breaks this bottom, I think that will become a very significant uh, indication that India IT stocks are moving further down. I think till that happens, we can be rest assured that we have touched the support here and we are likely to go up. So as a trade setup, you could look at today's Infosys bottom as a stop and look for buying entries. That is what I can say about Infosys for the day. So thank you so much for watching this, and I'm sorry I don't have time today to take any queries, but I'll see you in the next episode. Thank you. Bye.